Hello and welcome to ThePrint. I'm TCA Sharad Raghavan, and today I'm going to be talking to you about why net FDI into India has fallen to a 12-year low in the April to October period of this financial year. This decline in the net amount is driven by a surge in the amount of money companies are taking out of the country, along with a stagnation in the gross amount that they're putting in. Further, an analysis of data from the RBI shows that foreign investments made by Indian companies have also grown sharply in this financial year so far. According to economists, both trends of foreign companies taking their money out and Indian companies investing abroad are driven by the relative attractiveness of the US economy as compared to India's, especially during a period of global uncertainty. One point to note is that the RBI so far has data for April to October 2024, and therefore the comparison with previous years has also included only this period of those years. This analysis shows that in the April to October 2024 period, net FDI flows into India slumped to just $14.5 billion, the lowest since the same period of 2012-13, when it was $13.8 billion. The data also shows that net FDI has been slowing year after year since the pandemic. That is, while net FDI during the April to October period of the pandemic year 2020-2021 was 34 billion, it fell to 32.8 billion in 2021-22, 27.5 billion in 2022-23, and just 15.7 billion in 2023-24. The net FDI flows are the difference between the gross flows into the country and the money flowing out in the form of repatriation and disinvestment. It is important to note that gross FDI inflows into the country stood at 48.6 billion in the April to October 2024 period, which is the joint highest since at least 2011-12, which is the earliest year for which the RBI provides the disaggregated data. This figure is largely the same as it was in the same year of 2020-21 and 2021-22. The reason for the fall in net FDI then is because the outflows have surged. The money flowing out of the country as repatriation and disinvestment by foreign companies jumped to 34.1 billion in the April to October period of this financial year, up from 26.4 billion in the same period of the previous year. This figure has been increasing since 2017-18. Economists ThePrint spoke to say that the slowing GDP growth and the poor corporate profitability has a bearing on this, but that's a more short-term consideration since that trend is much more recent. However, they said that there's a more general sense that because of the ongoing global conflicts and uncertainty, that global trade will not be in India's favor. While we are expected to face a tough time on exports, petroleum prices and supplies, the only economy that's expected to be in comfort is the US economy. And so money is flowing to dollar-denominated assets. This trend has played out among foreign portfolio investors as well, who are those investors who invest in the securities market. Official data shows that foreign portfolio investors pulled out rupees 2.5 lakh crore from Indian markets during the April to December 2024 period of this financial year. Now, while foreign companies appear to be increasingly looking away from India for investments, it looks like Indian companies too are doing the same. Foreign investments by Indian companies jumped to 12.4 billion in April to October 2024, the highest since at least 2011-12, and a 55% increase over the same period of the previous year. The feeling among domestic investors in India is that investing here is not as attractive as investing in the US. The question for countries like India, the economists say, is whether it has the wherewithal to attract this money back again, both FDI as well as investments by domestic companies. However, these economists also did point out that one reason that Indian companies are investing abroad could be strategic, as they try to establish ports and shipping lines to ease trade. But on that note, that's all from me. Thank you so much for watching.